So the rationale behind this particular asset allocation table here, or asset allocation pyramid here, is not necessarily that this is that there's a logical reason why stocks should be twice the weight of Forex. I used it only so that I could use a real life example. This is what I do. The real takeaway here, the real rationale, something to consider, is not that stocks should be twice the weight of Forex, for example, but is that you should think about more than one capital market at a time. That there is opportunity outside merely being in one capital market where your market exposure is much more concentrated. So as we go through, as we start talking about, continue our discussion about diversification, there's a process that I go through where I think about how I'm going to execute this by coming up with a strategic idea, first of all. So it's not so much something that I'm approaching from the perspective of, okay, I want to find five different currency pairs, and now I'm going to figure out how to trade those five currency pairs. I find that it's a little easier to try to approach it from the idea of, let me get the strategic idea first. Let me figure out what I'm going to do first, and then start pulling the currency pairs that best fit that particular strategic idea. So that helps to kind of reverse the order in which you think about this. That it's not diversification that comes first. It's